Hello and good afternoon. Today I want to present about MFRS 8. MFRS 8, known as operating segments, were a component of entity that engage in business activities from which it may earn revenue and incur expenses. Then, whose operating results are reviewed by the chief operating decision making to make a decision about resources allocation and performance assessment. Then, for which discrete financial information is allocated. Then, the last is new segment that has all the characteristics except it has not yet earned revenue may be considered as operating segments.
Next, I'll be talking about the Chief Operating Decision Maker or CODM. The CODM is the person or group within an organization responsible for allocating resources and evaluating the performance of operating segment. This role is crucial because the financial information presented to the CODM determines how the company disclose its segment in financial statement. The CODM could be the CEO, COO, senior management, or even the board of directors, depending on the company structure. There are examples of CODM in publicly listed national companies. First, Petronas Chemical Group Berhad. The managing director is identified as the CODM. He evaluates the segment result and makes decisions on how to strategically allocate the group resources. Second, Samdabi Berhad identify both the group chief executive officer and the group management committee as CODMs. They regularly review internal segment report to guide business direction and performance management.
Now, I will talk about two types of segment reports. First, let's look at business segment reporting. This categorizes a company's operations based on distinct line of business or product or service. Each segment represents a significant component of the company, often with its own risk and return. A great example of business segment reporting is found in the 2024 Integrated Report of Petronas Chemical Group Berhad. PCG reports three main business segments. First, olefin and derivative. Second, fertilizer and methanol. And last, specialty chemicals. Next, we have geographical segment reporting. This divides a company operations based on the geographical areas in which it operates, reflecting the economic environment and risk associated with each region. Again, using PCG as our example, here how the 2023 revenue was distributed across various geographical segments. This segmental disclosure enables stakeholders to assess the performance and risk associated with different facets of the company's operations, facilitating more informed decision making.
Next, I will be discussing two key benefits of segmental reporting under MFRS 8, supported by an example from Samdabi Berhad. Firstly, segmental reporting enhances transparency in financial performance. Under MFRS 8, companies are required to disclose the financial results of each major operating segment. This allows stakeholders to see clearly which areas of the business are performing well and which are underperforming. So, let's take Samdabi as an example. In their 2023 annual report, the company disclosed segmental information for its key division, including industrial, motors, logistics, and healthcare. From the reports, we can see that the industrial segment contributed RM 70.45 billion in revenue and RM 1.34 billion in profit before interest and tax, making it the largest contributor to overall group performance. This level of detail helps users make informed judgments about the strengths of profitability of each segment rather than relying on overall figures alone. Secondly, segmental reporting improves risk assessments. MFRS 8 also requires company to disclose information by geographical area. This is important because it helps users understand how diversified the company is and whether it is overly reliant on specific region. For example, Samdabi reported revenues from Malaysia, China and Australia, with RM 10 billion generated from Malaysia and RM 9 billion from China. Users can access regional exposure and better understand the potential risk if a specific economy weakens. So, in summary, segmental reporting under MFRS 8 provides deeper insight into a company's performance and risk exposure, which enabling investors and stakeholders to make better informed decisions.
MFRS 134 means set out the minimum content of interim financial reports and identifies the recognition and measurement principles that should be applied during the interim period. According to the Bursa Malaysia, all listed entities, those with publicly traded debt or equity, are required to publish interim financial reports within 2 months after the end of each quarter. An interim financial reports refers to a financial report for a period shorter than a full financial year, such as 3 or 6 months. These reports can be either complete set of financial statement or a condensed version, depending on the entity's approach. They may be issued semi-annually, quarterly, or even bi-monthly, depending on regulatory or internal requirement.
Now, let's talk about two significant events and transactions. First, we have an impairment of asset. If an entity identifies that the carrying amount of an asset exceeds its recoverable amount during the interim period, it must recognize an impairment loss. This ensures that the financial statement reflect the asset's fair value and provide a true and fair view of the entity financial position. For example, Petronas Dagangan Berhad (PDB), in its financial statement for the year ended 31 December 2024, PDB recognized impairment losses on certain individual assets within its gas processing segment. This impairment were reflected in the adjustment to the carrying amount of PPE. For instance, the accumulated depreciation for PPE includes an impairment adjustment of 1.923 million ringgit Malaysia, indicating a reassessment of asset value due to change in operational or market conditions. Next, we turn to the acquisition and disposal of PPE. Significant acquisition or disposal of PPE during the interim period must be disclosed, as they can impact the entity operational capacity and future earning. In 2024, PDB made several key capital investments. Throughout 2024, PDB engaged in significant capital investment related to PPE additions. The company invested in various assets including building, land and pipeline and leasehold land. Notably, plant and pipeline saw addition amounting to 3.547 million ringgit Malaysia, and leasehold land increased by 13.447 million. Disposal or write-off. There were disposal and write-off totaling 63.921 million, reflecting the company's ongoing asset management and operation optimizing strategy. This transaction demonstrates PDB's commitment to maintaining and upgrading its infrastructure to support operational efficiency and growth.
Lastly, I will explain about interim reporting period. The differences between comparative year and current year, there are 4 quarters: first, second, third and fourth. For the first quarter, from January to March, and second quarter from April to June, then third quarter from July to September, then for the fourth quarter from October to December.